Folks, welcome to Thursday Night Stock Charts Live. What we're going to go over tonight, FedEx earnings. They reported earnings, very good numbers, good news out of FedEx. We'll talk about our trades on FedEx. We did an options trade on it. We didn't buy the options. We sold the options. We are the casino, not the gambler. That increases our odds of success. We're going to talk about the Fed's balance sheet. He was pretty hawkish yesterday, right? That Fed balance sheet must have went down. No? Stick around. I'll show you. We're going to talk about the weekly charts as we always do, given that it is Thursday night, and that's what we do. On Thursday nights, we get ready for next week. We're not thinking about just simply Friday, although one day makes a big difference when you're looking at weekly charts on a Thursday night. We always say that on Saturdays when I re-review all these charts again with members, that now that the week had closed on a Saturday, I say, wow, remember this chart on Thursday night, how it looked, and look at it now. One trading day makes a big difference. So I don't have a big agenda here tonight, frankly. I am late, and I didn't prepare all that much. So what that does allow us is a lot more time, probably, rather than listening to my hot air. I'll go over the charts that you want me to go over. So first I go over the members charts. Then I go over our super chats. And then if we have time left, I'll take some requests from the audience. And tonight's show, folks, is going to be brought to you by our friends over at TrendSpider, automated technical analysis using algorithms. And it's a time saver. I'm going to demonstrate how to use TrendSpider later on. But I believe in it so much that I give it away free to our silver and gold level members, to the contrarian trader. How is our week so far this week? Outstanding. Very good. Our gold stocks ripped today. Silver stocks ripped today. Silver ripped. So if you're not interested in becoming a member, cool. I get it. There's a 35% discount code to TrendSpider below. Take advantage of it. Let's go to comments and say hello to people. Tom, Bob, good evening. I gave you a big thumbs up on CRISPR. I bought it $70, and it's 2023 out of the money called. Okay, super good. Newmont just hit 59. Yeah, you know what? Newmont on earlier in the week, I had an alert that fired off, and it was breaking out despite the fact that the gold mining stocks were under pressure. So that was an early warning signal that yesterday's sell-off in the gold mining stocks they were just washing out week longs. I think we've seen the bottom in the gold stocks. I'm going to go to a monthly chart of gold in a little while, and you're going to be shocked at what I found. And the month is now almost over. We're beyond the halfway point. So good for you on CRISPR. Wing, if I don't remember it, remind me, okay? As a matter of fact, let me try to write these down. Larry. Larry, pardon the pun. I'm guilty of crude behavior, Bob. I just added to XOM and Petrobras, PBR. All right. We'll take a look at them, Larry. We'll take a look at them. No worries. Did you stay small? Hopefully. Fingers crossed. Okay, let's talk about FedEx. FedEx came out, and I got to say, so let's first talk about the trade. What's the trade? I got to go to a weekly chart. So I actually opened up a trade Tuesday in preparation for earnings. I thought earnings were supposed to be yesterday. I got that wrong. But no harm, no foul, no big deal. Implied volatility increased today, so I opened up another round of the sale of calls and puts. We'll just stick with them. I'm not going to waste everybody's time here. But we have a fairly large position here now. And I sold. This is a strangle trade. I keep promising to make a video about what a strangle trade is, so I don't have to keep repeating this. I'm sorry, I haven't gotten to it yet. A strangle trade. What's a strangle trade? Well, you could either be long of a strangle trade, or you could be short of a strangle trade. What is a strangle? First off, it's a simultaneous sale or purchase of a call and a put, same strike price. Now, if you buy the strangle, you're betting for a big, big move. You want a lot of volatility on that stock so you can make money. If you sell the options, well, then you don't want all that much volatility. You want it to do nothing so it expires worthless. So, beginning on Tuesday and then again today, we sold a deep out of the money 265 call option. Then today I sold another 270 option, I think it is. Then again on Tuesday, we sold a 205. This is wrong. 205 put. And then today I sold another round of puts at around 195 or 190. I forget which. But as long as these strikes, we could just deal with these two because these are the first strikes to get challenged. As long as these don't get challenged, those options expire worthless tomorrow. We sold them. We are the casino. We are not the gambler. So we're collecting premium. We want cash flow. So what did FedEx do? Are we happy with the price action after hours? Loving it. So yeah, the shares moved up higher, but they are currently trading well below our 265 strike and far below our 270 strike. So those will most likely, not a guarantee, but most likely expire worthless. Pretty much a guarantee that our put options are going to expire worthless. We like that. So that makes for a good trade. So congrats to, I know Franklin joined in. I don't know who else joined in, but congrats on the trade. So FedEx earnings, good numbers, really good numbers, worthy of the move higher after hours. They sped up a share buyback. The labor shortage did not affect them. I think they beat on earnings. Forward-looking guidance, pretty good. So there were no chinks in the armor here. FedEx looking very good, up in the after hours, holding gains off the highs of the session. So I'm hoping for the shares to go as much unchanged as possible tomorrow, and those options that we sold expire worthless, and we're good. We move on to the next trade. But we're running out of options trades to trade. So this option season is rapidly coming to a close. But we will be back for Q1 earnings. Actually, I'm sorry, Q4 earnings getting reported in Q1. All right, let's take a look at okay, so let's bring up the S&P 500 monthly chart. I want to stay consistent. 2 weeks ago, I promised that I was going to keep an eye on the monthly chart of the S&P 500, looking for a top. As it stands right now, we don't have one. I think that's still, even after today's sell-off on the markets, that we're probably going to drift up higher into the back half of the year because that's generally just what happens. Should it happen? Probably not. The market's very overvalued. The Federal Reserve is definitely taking away liquidity. At least they're verbalizing it. And that's going to pose a problem for the markets because if you overlay a chart of the S&P 500 relative to the Fed's balance sheet, they trade in tandem. So if you're draining liquidity out of the system, if you're not buying as much debt, well, then it's going to become all the more harder to keep this party going. So today, what we saw was a concern. You know, yesterday you had somewhat of a relief rally in the markets. I think that's the reason for that relief rally was because at least traders had visibility moving out into the new trading year. The problem is that old leaders may no longer be the leadership group, and that new leaders in different sectors emerge. And we're going to go over those in a little while because we're going to see what did well today and what did poorly. And we're also going to talk about a signal by the bond market. And I know a lot of people are out there and you're saying, Jesus Christ, this guy always talks about bonds. Why doesn't he talk about hot stocks and trades? That's not my purpose. There are plenty of guys on YouTube to go to. They suck. Most of them suck, but they're there. If you want those videos, great. They're out there. Type in hot stocks. It's one of the main keywords out there to get those guys. My job is to help point out signals by the market that all is well or all is not well. And to do that, we always want to take a look at the bond market. The bond market is the tail that wags the stock market dog. It's as simple as that. The bond market is always right. The stock market is usually right. But when there's a divergence, meaning bonds is sending you one signal, stock market sending you another signal, watch the bond market. It's probably right. The bond market is vastly larger than the stock market. So after the Federal Reserve's meeting yesterday, you would have thought that, that balance sheet must have taken a hit this week because they report they're buying each week on a weekly basis. And let's take a look. What did they do? It's reported as of yesterday, I believe. They reported it yesterday. Must have gone down, right? Nope. New all-time highs. New all-time highs. The prior week, 8,664,524,000,000. This week, in 1 week, now it's 8,656,666,666,000,000. Ugh, that's weird. So don't listen to what they say, watch what they do. Don't listen to what they say, watch what they do. This is fact. They are aggressively propping this market up higher, and today they didn't care. The traders didn't care. So let's go to the weekly charts and see how we're poised. Remember, one trading day left to go in the week. First, let's begin with economic data. It's chock full of contradictions. Yesterday, or Tuesday, I should say. Tuesday, we had the PPI come out. That's the producer price index, the measure of inflation at the consumer level, a producer level. And it came in red hot. Red hot. Retail sales. I don't want to skip over NFIB. That's an important number. That's a small business sentiment index. It beat. Retail sales missed by a mile. Back out autos, it really took a hit. The expectation was a 1% rise, actual 0.3. Import prices. I always say to watch your import prices and your export prices. That is the real gauge of inflation. And import prices beat again. The market expected a 0.6 read, actual 0.7% read. Empire State Manufacturing Index, very good number. Very good number. Home Building Index, very good. Where was the... Oh, here it is. Okay. Building permits. Beat, forward-looking indicator, very good. Housing starts. Builders are breaking ground. Why? Because lumber prices have come down. So they can now break ground. They stopped for a while there. So that's good. Continuing claims. Actually, forget about continuing claims. Initial jobless claims, that ticked up. That ticked up by about 10,000 jobs. Never want to see that. And Friday, you just had some Fed heads out tomorrow. No big deal. So that's the economic data for the week. A mixed bag. So what's going on? What did the markets tell us today? What happened? All you need to do is take a look at the yield curve. And the yield curve is dropping like a rock. We're off the lows of the month, but let's see if this updated after hours. It did not. Okay, so this is the actual close here. So we've bounced off the lows, but still we've gapped down month over month. And that's a signal by the bond market saying, hey, we're nervous. We don't want to lend out 10 years. We want to lend out 2 years. We don't want to go out that far. We don't know what the world's going to look like in 10 years. So the bond market is sending us a signal that there's a lot of concern about the health of the economy in the bond market. And when you take a look at the 10-year yield, you listen to Fed Chair Powell yesterday, a lot of hawkish rhetoric, right? Why are bond yields down on the week? They're down. Why would that be? Bond prices, 20-year bond price is up on the week, stalled out here. Last week, a horrible week. Do we break out? Do we fail? Not quite sure yet. Volume is strong. Not much move net. What did it do today? Had to go up. It went up, but it faded off the highs of the day. Stokes are going in the wrong direction, losing momentum. Hard call here. Hard call on bonds, because when you see this many, and you're seeing this in equities as well, where you're breaking out like you had here, failure. You break out again, failure to hold the breakout point. You start seeing that in equities and in bonds, there's something very, very wrong. And as long as this keeps continuing, these breakouts and failures, that kills the momentum investor because their confidence gets destroyed. And it's a signal to those that are out there watching this market that you're seeing volatility in the markets at very high valuations in a bull market that's long in the tooth. And why is there a bull market? Well, the Federal Reserve is promising to raise rates next year twice at a minimum, maybe 3 times, and they're cutting back on the taper. What do we do here? So a lot of concern out there in the market, and it's being displayed on the charts. This is why we watch the charts. We don't listen to CNBC. I don't even keep it on to listen to, because it takes parking space up in your head. Don't listen to these Wall Street thugs. Watch the charts. It's all you need to do. We've been talking about inflation. Christ almighty. I can go back, DBA. I can go back, I don't know how long ago now. I've been saying, watch out for food inflation. This is the agriculture fund. This is way back here. I was saying on this breakout, man, you got to be careful. Food inflation is coming. We're breaking out. We found a bottom. We've stopped going down. And some of our members bought in here. I've always promised myself I was going to buy in. I never did. But all the while, you had the Federal Reserve, the politicians, all of these thugs on CNBC saying, oh, it's all transitory. It's temporary. Now the Federal Reserve can't even say that it's temporary anymore. They took that out of their lexicon. Now they're admitting this isn't going anywhere fast. So this is a bullish chart. Food prices are going up. But who am I? I'm just a guy in his basement looking at charts. The dollar. So the Federal Reserve yesterday came out and said, hey, we're hawkish. We're serious. We're serious about raising rates. We're going to fight this inflation. It's going to get knocked for a loop. I expect it to go down to 2% next year. That's how confident, this is Fed Chair Powell, that's how confident I am with what we're going to do here. Okay. So you would think that given the fact that the Fed chair is extremely hawkish, talked a big game, the dollar should rip. The dollar should go up higher. Why is it down on the week? Why is it well off the highs? Why does it appear as though we are topping out here on the US dollar? The market sends you signals. So the market heard what he had to say yesterday, but then you take a look at this. the Fed's balance sheet, which is reported the very same day. And they raised it to a new all-time high. In 1 week, they went up over $100 billion. 1 week. They're supposed to be doing 100. I'm sorry. 120. It's supposed to be doing $105 billion per month. They did that in like 1 week last week. Is that a signal that they're done buying? Don't listen to what they say. Watch what they do. So the VIX. The VIX is up on the week, but we're well off the highs of the week. So I'm still not of the opinion yet. There's way too much seasonality, historical seasonality that shows us that going into the back half of the year, they do not want the stock market correcting. What's going to happen? Why doesn't it not normally correct? The reason is that you have people that want to sell in Q1 or they want to be in cash in Q1. They can't have a stock market crash in the back half of the year. They want to close out the year. To close out their year, they need a pool of liquidity to sell into. They need to get the little guy excited. All is well. All is right. Buy stocks. Jim Cramer, what did he do? He touted DD the other day before they delisted it. He did the same thing with Bear Stearns right before it went bankrupt, like a couple of days later. Don't let these people take parking space up in your head. What they're getting ready for is a big sell-off in this market. So the VIX, well off the highs of the week. I'm not convinced that we can't go down lower. Yes, today was a very bearish day for the market. Let's update this. So you could argue that this is a bull flag setup on the VIX, which is bearish for the stock market. Stocks are they're oversold. So we may get a few more days of volatility in this market. So really, it's at a point like this where you got to take a look at your portfolio and you got to say, okay, am I over levered? Am I too big on my positions? If you are, sit back, have a cup of coffee, have a cocktail, not too many cocktails when you're doing this. Take a chart out, look at your basis cost, look at your profit, look at where support is, get TrendSpider 35% discount code below, set up your alerts and say, okay, here's my line in the sand. If my stock, if you're long, breaks the support level, I'm going to sell X amount. Doesn't mean you have to sell it all. Raise some cash. We're at record high margin debt. So when this goes, all that debt's going to come due. And all those people sitting out there with stocks that are 50% marginable after a couple of days of a 2, 3, 4, 5% correction in these high beta ARC names, those stocks that were 50% marginable overnight can either go to 60, 70, or non-marginable. CRISPR, for case in point, not marginable. I don't know if it ever was, but beware of your broker. The damage comes from where you don't expect it. You go to sleep after a down day. Wow, your portfolio took a hit. You got to take a look at the margin requirements for each position. What was 50% today after a rough down day or a rough week, their risk department may be coming out and saying, hey, listen, here's a list of stocks. You got to raise margin requirements. These people got to put up more collateral. And when they can't put up that collateral, it's called the baguettes. That's my word, the baguettes. Selling begets more selling. So you want to take advantage now. If you're on margin, lighten up. Nobody's going to tell you that on CNBC. They're not going to do it. It's not part of their narrative. So please Take a moment. Think about it. Go to your financial advisor. Say, hey, does this guy make sense? And if he says, yeah, keep him. If he says no, stay levered up, fire him. He's no effing good. All right, the VIX. Now the transports. Okay, so the transports are down 2.5% on the week. This is not a horrible chart. You could argue that we're in a bull flag setup. We haven't broken support. Indicators look good. Volume is probably going to come in about average tomorrow. I'm liking we always like to memorialize early stage observations. I'm liking these Stokes. Note how what are stochastics, right? Many people look at the Stokes and they think, oh, the two squiggly lines, they go up, it's good. They go over 80, you got to short stocks. No, that's not what you use them for. They're momentum indicators. So when they're declining and you're entertaining buying a stock, an index, whatever, a box of cupcakes, it doesn't matter. Whatever you're looking at to buy, your stochastics need to be either flattening out or hooking up higher. Then you entertain nibbling on a position to open up your trade. So right now, what we're seeing is a defense of the 50 line or the neutral line on the transports. That's a good thing. We have put in new weekly lows. That's not a good thing. Volume is not overwhelming, so you're not seeing a ton of institutional distribution. So I'm not panicking here at all. Daily chart. Now, the daily chart, and some of you may be wondering, why is he spending so much time in the transports? Why not hot stock, QQQ names, or CRISPR, or any of these other names? Why? Because the Dow Transportation Average is your canary in the coal mine for stocks. As go the Dow transports, in general goes the rest of the market. If the transports go, in all probability, the rest of the market's going to go as well. So we always watch the Dow transports. So the Dow transports are now retesting, again, the lower band of support, just as we did last week, but we reversed. This week, we're back again. We haven't broken support. So do we anticipate a break of support on the transports? No, not at all. I'm not going to, if I was long of the transports, I wouldn't sell them yet. Why? I don't have a confirmation breakdown. So if we close down below this lower band of support, you bet your bottom dollar, I'm doing a risk assessment and I'm going to lighten up on some of my trades. But right now, no, I'm good. Volume did rise today. We could be putting in, and I'll illustrate this for you. We could be putting in higher lows. Let's keep this consistent. I'm anal. There we go. RSI continues to trend downward and down below 50. That's got to get resolved. What we may be putting in here, let's update this. What we may be putting in here is a double bottom and a higher low on RSI. I really don't care what it does because I'm not going to trade it until RSI closes above this upper band of resistance in blue. And you may not get a breakout in conjunction with the RSI. Many times you see the RSI break out first. So you have an indicator leading price performance. So we're going to be watching this carefully because, again, as goes the transports, so goes generally the rest of the market. You ever hear the Dow theory? So look up the Dow theory. Speaking of the Dow, weekly chart, we're down less than a quarter percentage point on volume this week. Daily chart, let's speed this up. How much time have I gone through already? Wow, it's almost 6:30. Daily chart. We held a breakout today. We had a continuation breakout and reversal. Not wonderful, but we held support, big volume. Stokes are still good. S&P 500. Weekly chart down just shy of 1%. We're off the lows. We're stone's throw away from all-time highs here. Volume is manageable, not aggressively high at all. Daily chart. Okay, so here's where your annotations come in. No matter what charting software that you use, so let's take our crayon out. All right, so what was resistance back here remains resistance. It's as simple as that. And what you could be forming here is arguably interesting. Remember I said earlier, I'm going to get back to my thought in a moment about what's forming here. Remember I said earlier that you could have RSI lead price performance. Well, guess what? RSI is leading price performance. And I want to show you something here. I'm just noticing it now. We have a head and shoulders setup, or an inverted head and shoulders setup. It's a bullish setup. Left shoulder, head, right shoulder. This means zero. It means nothing right now until, of course, we break out. So what makes me optimistic that we will get a breakout, there are no guarantees here, but what keeps me from shorting the market, which I desperately want to do, but I'm not going to do it, I'm not going to do it in 2021. It's not going to happen. Unless it's the last week of the year and we see some volatility. I'll position for the first quarter. But right now, I'm not going to do it. Way too much time left in the year. So we broke out here. Actually, we broke out here, failed to hold. We broke out yet again on the 15th, and we're holding it. But price is not following through. So in a healthy market, you'll get a pullback and a retest of what was resistance back here and back here, meaning this line in blue, will now act as support. It didn't do so here. It failed on the 13th. It failed on the 9th. Will it hold this time? That's the question. If it doesn't hold, then forget about this inverted head and shoulders setup. That'll probably fail. But right now, what I think is setting up is a breakout on the market. I think we could easily make new all-time highs by the end of the year, even with this level of selling. But I don't think it's going to last all that long into the new year. I started to say earlier what these guys want to do. These guys on Wall Street, they want to book their year. They want to book it. They want to be done. They want to hop on their Lear jets. They want to fly out to Aspen, Stad with their families. They're going to put the computers on autopilot and say, just keep everything in check so I don't have to worry. And after the first of the year, brand new ball game. But from this point forward, after the Fed meeting, things are going to get slower and slower every single day until the first of the year. So beware of making any big moves one direction or the other this time of year, because any movement is probably going to roll in now on light volume. That means that they're going to easily manipulate the market. So I wouldn't make any big bets this time of year. All right, I'm getting along in the tooth here. Small caps, rough week down, brutal. Down over 2.75% on the week on volume. This is what you don't want to see. Daily chart. Horrible day today. Horrible day. I would avoid right now. You may have a W formation forming here. I would avoid right now. Tues, weekly chart, down on the week, down over 2.75%. Are our Stokes beginning to put in higher lows? We don't know, but we always want to memorialize so we can come back in a couple of weeks if we're right. Do one of these. We identified it. Volume, high, very high. That's not what you want to see. So this is where it comes down to, are we seeing sector rotation? Will the leadership names of the past few years, meaning the Qs, will they remain the leadership names? Many of the high beta names, the DocuSigns, even NVIDIA now, they're taking it on the chin. So all you really have left are the Apples of the world, the Microsofts of the world, those larger names. Those are the generals. Those are the admirals of this index. And even Apple is now reversing off of piercing the third standard deviation Bollinger Band. So they can hold this party in check until after the first of the year. But I think we're going to get a sell-off, especially if the Fed's balance sheet, if they eventually do begin to lighten up. Man, Apple took a beating today. How was volume? Big volume. So this is what I mean. These are your whales. They needed that rally yesterday. They needed that pool of liquidity to sell into. They're getting out. They're getting out. They're raising cash. Follow the whales. Follow the money. How do you know it's money? This is not mom and pop selling 100 shares of Apple. It's just not. Those are the banks and Nancy Pelosi. Now, we took a look at, here, let's bring up this chart of the XLK. XLK is technology, right? So it's a pure play. No Qs, no big generals. You have a big mix of stocks in this basket here. And we're down 3 1/3%. Even after breaking out last week. We haven't failed yet. But what else is what's up this week? The banks. The banks. So I'm of the opinion that if the Fed chair, if the Federal Reserve does begin to do what they said they're going to do at the beginning of the year, then that means their balance sheet should grow less rapidly. You didn't see that last week, as reported yesterday. But if the Fed balance sheet does rise less rapidly and yields begin to tick up, and the S&P 500 decides, you know what, we're going to go to the value plays. We're going to go to the banks. We're going to go to some of the transport names, maybe the airlines, things cyclical names. And we're going to rally those for a while. We're going to keep the party going. Yet tech is going to lag. Why? Yields are going up. Watch the banks. They love rising yields. We're long of the banks. I've been reluctant to buy more. We may do it tomorrow. Members expect an alert if I do. Look at the banks today. So here's the banks on a daily time frame. What were they up? 1.26%. What did tech do today? Down 2.83%. You know, granted, these are far more volatile than bank stocks, but the point of the matter is what was up, what was down. Clearly, the banks were the outperformers, especially when yields are down. That usually doesn't help banks. It helps tech, but tech was still down. So you're seeing a little bit of sector rotation here. So this is why we look at the charts. That's why we do not listen to CNBC ever, except for Rick Santelli. He's a good guy. I like Rick Santelli. Semis, weekly chart, down 3.5%. But we haven't broken support yet. I put this arrow up here last week because I was identifying a potential, like an observation, that we may be hooking or flattening out. I'm still of that opinion. We may be flattening out and getting ready for a move up higher. Volume is above average this week. Daily chart. What a mind-blowing day, man. This kills confidence. This kills confidence. I'm telling you right now, if this were not a Santa Claus Rally time of year, I'd be a lot more bearish than I'm speaking right now. I mean, this is horrible, horrible price action. Horrible. That was volume. This is one of the highest volume bars of the year. So your RSI remains in a downtrend. This is why we always watch the RSI. Is it in a downtrend channel? If it is, if it's in a downtrend channel and you're breaking out to new higher highs, that's not good. That's probably going to fail. And sure enough, what happened? It failed. Biotechs. Up. Up. We're long of CRISPR. We bought CRISPR again this week. We're going to look to add more as long as it behaves. Let's go to comments. Yesterday's rally could be shaking out the shorts. Could be. The announcement is hawkish, not bullish. Yes. So yeah, I don't disagree with you. The valuation of the overall market, no matter what, is very overvalued. I go over that every Sunday night. Very overvalued. Buffett indicator, Schiller PE ratio, no doubt. But if the tech stocks come in, if they correct, the bank stocks is still very, very cheap. So the bank stocks could move up. And all you need to do is to have the rest of the S&P 500 trade sideways. And as long as those tech stocks, the valuations come in, the valuation of the overall S&P 500 could come in as well. So I don't know necessarily if the entire stock market needs to roll over quite yet. If you begin to see the 10-year yield rally up and through 2.75%, look out below for everything, including bank stocks, because I just don't think the economy can handle it. So, because it couldn't handle it back in 2018, and that's when you had that last big sell-off. So, I'll worry about the rest of the market at that time. Right now, I'm worried about tech, high beta tech in particular. Tom, the only bullish part is to hold cash until physical metals in demand. Yesterday was a great day to buy gold and silver. They threw the baby out of the bathwater. We were in there buying gold mining stocks yesterday, and they did very, very well today. So, again, don't let them take parking space up in your head. Yesterday was a great day. They just killed the price of gold, the price of silver. I mean, take a look at what they did to gold. Yesterday on the announcement. Killed it. Took it all the way down to 1753. But as I always coach members, never ever trade the knee-jerk reaction on a binary event. What's a binary event? Federal Reserve announcement, earnings announcement. The initial reaction is generally the wrong reaction. Wait for things to settle out. These are your algorithms, either trying to wipe people out of their positions, taking out stops, or selling because they don't like the headline that they just scraped, and they're dumping. And all of a sudden, you get more data, and the markets go ripping up higher. Don't sell the knee-jerk reaction. So this is a great opportunity. Here, NUGT, we bought this yesterday, added more. Look what they did. They killed it. Look at the rally today, up nearly 10.5% today alone. And I wouldn't stay in cash. Eric, evening, Bob. So 5, you get a chance, okay? Wage and food inflation will kill everything. Yeah, the worst part is that wages aren't even keeping up with the expectations of the street. The last jobs data report that came out, they missed on jobs, missed on wages. Yet inflation is going through the roof. Go figure. 480 shenanigans. Our CEO stepping down like it's late 2019. You know, it's funny you say that. I don't know, to answer your question. I'm seeing a lot of it. Bezos, certainly, several others. But the thing that stands out to me is that in 1999, Bezos was Times Man of the Year. Who was it this past month or this month? Elon Musk. Top of the market? I don't know. Fed's toolbox is empty right now, no doubt about it. Bank of International Settlement will save them by dumping trillions of paper gold contracts. Well, I don't. You could be right about that. I'm thinking that the Basel III Accord is one of the reasons why gold is going to move up higher. I've been watching gold get ripped apart with bear raids, just knocking it down. I remember I was live. Was it back in August or September? Live on a Sunday night. The markets had just opened. One of our normal members was on, and I had already gone through gold. I wasn't doing anything. And as I go on to other charts, he puts in the comment, "Hey, why is gold crashing?" And somebody had dumped over $1 billion worth of gold onto the COMEX in Asia. Was that back here? No, this is not. Was that here? Yeah, it was August. This is it. This is it. I'm live. I had a big position in gold mining stocks, and man, did we get hammered the next day. But a couple of days later, right back up. So I think what they're doing is they're blowing out all the stops here, and they're buying gold. They're getting net long of gold. These pricks do not want to pay retail. They don't even want a 10%. They don't want a 10% off. They want deep discount. They want your blood. And then they're going to let gold rip up higher. The only time we will see the limit up gold. Bob, your conclusion will be Newmont and physical, PHYS, you mean physical gold, Tom? Hi, Jody. Taco, I think crypto could kill you. Unfortunately, I can't get it priced to short. All right. Taco again. I don't know options. Got to learn options. Got to learn options. Hey, Franklin. Yeah, we had a good day today, right? And FedEx looking good after hours. FedEx, the options trade looking good. Yeah. So, Tom, yeah, I mean, so when you're looking to preserve a wealth and you don't want the volatility, you buy the physical. You buy the physical gold, bury it, store it, whatever you're going to do. That'll preserve your buying power. If you're looking to grow your wealth, increase your wealth, then you want to buy the gold mining stocks. That's what we're doing, is buying the gold mining stocks. I'm way too young. I need to grow my wealth. So I have zero problem with people buying gold bars. I just wouldn't store it anywhere. I don't know where I'd put it, but I won't. If Armageddon hits, I don't trust anybody with my gold. CRISPR, January 2022, 240 is active. You went long of the 240s? Let's talk about way out of the money, man. Okay. Jody. All right. Let's go back to the charts. I'm going to speed this up because we have chart requests to get to. All right, biotech's looking good. Doji star formation on the week. I think these shares are firming up. Higher lows on Stokes, higher lows RSI. Not a great day today, but not a horrible week. We like it still, despite the down day. Energy, weekly chart, down on the week. Higher lows on Stokes, perhaps, and RSI, perhaps. Holding support. One trading day left to go. Let's go to the daily chart. Consolidating, nothing to do here, but watch. Natural gas getting crushed again this week. Avoid. Oil consolidating on the week. Stokes down below 50. Don't like it. I would avoid right now. Let's go to a daily chart, see what's going on here. Loving the Stokes. RSI is meh. Price up, no breakout. Volume horrible. I defer back to weekly chart with Stokes declining. I don't like it. I would avoid until these Stokes hook back up, just like they did here and failed, but then hook back up again. Got to hook back up. Emerging markets. Keep an eye on emerging markets, folks. If the dollar goes, let's go back to the dollar. The dollar is not broken. It's down, but it's not broken. But all these topping tails here, that's the market saying, hey, psst, hey. They got a lot of sellers up here. All these guys who bought dollars back here in the Forex, they want their money back. They're not confident. They know that 30% of all dollars in existence were printed within the past 18 months. We're devaluing our currency. And the euro's moving up. Speaking of the euro, good week, good consolidation on the euro. 55% of the basket that trades against the US dollar, the euro. Watch it. What's the FXY doing? Down off the week, off of its lows, consolidating. Watch the yen, watch the euro. If they begin to break out, dollar's done. And if the dollar's done, this is back to emerging markets. You want to take a look at emerging markets. A lot of consolidation, well off the highs. I think we're going to be talking about emerging markets in 2022. A lot of damage here. A rising US dollar, which we've had, hurts emerging markets. But if they break, the dollar breaks, good for emerging markets. Gold. Okay. So we spend a lot of time here talking about you got to look at your macro charts. Most of the times we go over weekly charts, then daily charts. But there are times where I'm looking at the monthly charts and quarterly charts. And in this case, gold, you got to pay attention, folks. This is not closed yet. What do we have? This is the 16th. Several trading days left to go in the month, but we are breaking out above monthly resistance. We did it last month, but it failed. It could happen again. We did not chase last month. So we're going to wait, watch. Do we close above this resistance level? Stokes hooking up. I was hammering the table for months about these Stokes looking so ugly. And now they're hooking up, looking glamorous. Still down below 50. They could still fail, but looking good. Very, very good. Volume this month is very timid. Weekly chart. How are we looking on the week? Drum roll, please. We are looking the bomb on the weekly chart. We are up 0.75%. But didn't the Federal Reserve say that they're going to do 2 rate hikes in 2022? They are going to taper faster than what they promised initially. So you would expect the dollar to go up, which it didn't. You would expect yields to go up, which it didn't. And you'd expect gold to go down, which it didn't. It's up 0.75 of a percentage point. What the market is telling you is that whatever the Federal Reserve is doing, it ain't enough. It's not enough. Our inflation rate, if you're using the same way to calculate CPI as they were back in 1980, late 1970s, 1980, our inflation would be between 13.5 and 15%. Got it from Peter Schiff. That would be higher than the worst year of inflation back in the 1970s. 1980 was the peak. But at that point in time, Paul Volcker was jacking up interest rates quarter after quarter. We went up into the high teens, if not the low 20s on the Fed's fund rate to knock down inflation. They finally did it. Folks, we haven't raised interest rates once in the past year. Not once. And they're still throwing gasoline on the fire by buying more bonds. The home market, the home mortgage market is on fire. It's doing great. Yet the Federal Reserve is in there buying mortgage-backed securities. Why? So we haven't even begun to fight the fight on inflation, yet people think that gold's going to go down because the Federal Reserve is going to stop throwing less gasoline on a fire that's raging. That's insanity. It's utter insanity. And what the bond market is telling you vis-a-vis the yield curve, it's telling you that if they don't buy more bonds, if they do increase interest rates, this economy is going to roll over. That's why you're not seeing the dollar rally. That's why you're not seeing bond yields move up higher. They're getting worried. Gold mining stocks, weekly chart. We're long of them. GDXJ up nearly a percentage point. Nice, no breakout yet. Nugget, I mentioned earlier, up 10% today, but only 4.4% on the week. This is, if we could close, remember, one trading day left to go. All right, so we don't know what Nugget's going to look like right now, what it's going to look like at 4 p.m. Eastern Standard Time tomorrow. Ideally, we're higher. That would be a great thing. But you never know what could happen. Fingers crossed, so we don't count our chickens before they hatch. If we do close with a bullish reversal bar like this or better, folks, look out above. I mean, you've probably seen a bottom on the gold mining stocks. All right. And this is silver. We'll leave it off at silver. Bullish key reversal bar. Let's go to some chart requests. I ate up an entire hour. All right, we're going to be using our friends over at TrendSpider. I'm probably not going to get to everybody's symbols tonight, folks. See how many I have to go over here. Oh, I don't have many at all. All right, cool. So I can go over requests. All right. Louis. Yeah, yeah. You know what I was listening to? That's funny you bring this up. Um, I was listening to what's her name? Damn it, she's really, really good. Danielle DiMartino. She used to work at the Federal Reserve. Really nice lady, very, very smart. If you're on Twitter or on YouTube, just type in her name, follow her. She's very smart. She knows the inside workings of the Federal Reserve. And she was talking the other day about, she was being interviewed. And she goes, for you young kids out there, there's something out there called a CD. And once upon a time, it actually paid you money. Like Lewis just brought up here, 16% interest. And that, if they ever did that, you know where the stock market would be. I mean, CDs are risk-free. Stock market would be tanking. That's funny. Thanks for bringing that up. NY Jets, happy holidays to you, my friend. Happy holidays to everybody. And if I forget to say it, thank you for being here. My pleasure to be here with you. Thanks for spending your time with me. And don't forget to smash the like button. Please, por favor, to our friends south of the border. All right, let's go through some of these chart requests. I got to make a list. I don't know which time tonight, too. Where's my writing implement? I put it in my briefcase. I brought it out to the car. Here's one. All right. All right, Larry. We got to go over Larry. Can never forget Larry. Larry, thanks for that basket of chocolates, man. That was really nice. Very, very sweet of you. My wife sends her respects. You're always a gentleman. PBR. RIVN for Tom Liu. Tom, did you said they went down? Did they report earnings today or anything? SoFi for Eric. $480 shenanigans, AMC. Lewis, I worked at TSS Seedman's back then. He would not pay his vendors because he wanted to keep the money again. That's awesome. That's great. Hey, Bob, thanks for the great content. Thank you for the comment. You didn't have to say that, but thank you. Could you go over BIGC? It had 50% revenue growth in Q3, but plummeted along with the rest of the bottom. I think it's bottom now. We'll take a look. All right, we'll leave it off with BIGC. Okay, let's do it. Folks, we're going to be using TrendSpider. They sponsor the program. 35% discount code below. I give it away free to our silver and gold level members. Let's get to it. All right, for Larry. Let's begin with Larry. All right, Larry, XOM. Larry, what did you do here? You bought it today, or I'm guilty of crude behavior. I love that. I'm guilty of crude behavior, Bob. I just added XOM and PBR. I like PBR. XOM is good too. I don't know if Norris is on right now, but Norris owns XOM. Let's take a look at XOM first. Let's go to the monthly chart to get a feel. I haven't looked at it in a while. Let's get rid of all of these old. Clean this up a bit. All right. So this is a monthly chart. And I'm going to use the automated trend lines. Here, click of a button. Boom. That's the algorithm working for you. So you don't have real serious resistance up until around 72 bucks a share. I don't dislike this chart. Yeah, we're down on the month, but I don't dislike it. There's your lower band of support. All right, so there's your resistance. It's 63, let's call it $64 per share. There's your resistance. I'd be a buyer. Let's go down to a weekly chart. And don't knock yourself for buying it. I mean, in fact, these are the weekly automated trend lines. Here, watch. Take them off. Put them back on. Oh, actually, I was looking at last week. Sorry about that. I got your hopes up. All right, so this breakout from last week didn't work. It didn't succeed in following through. It failed. What I would do here, again, I wouldn't beat yourself up. It's paying a nice dividend. What I would do is, if we get more volatility and we pull back further, I look at XOM. Damn it. Down here. And get along there. Or add more there. If it doesn't come down there, I would wait since you're already long, I would wait for a breakout up here. That's the game plan. I would ignore the weekly breakout points, because even if you break out on a weekly time frame like you did last week, you still got this major resistance level above to worry about. Daily chart, reversal bar on the day. Not loving it. I think that you're forming a base here. You're going to get a lot of backing, filling. It'll cause you anxiety, but ultimately, I think that it'll work out okay. Let's check out seasonality. December, a very favorable month. Out of curiosity, let's go to the weeks. So the final weeks of the year are not great. Q1, not great, but you're collecting a dividend. So the time to buy is right here. Whatever month this is, the 10th week of the year, whatever month that is, I have no idea. All right, let's move on. What else we got? PBR. Now, this is a emerging market play. This looks better to me. I drew these resistance levels and support levels a long time ago. I haven't gone over this chart in a while. It was probably for you. I love the chart. I love PBR here. What's it yielding? Is that possible? PBR yielding nearly 19%? No. PBR is yielding 19%. I'm going all in tomorrow. Where's the dividend? Holy, it's yielding 18%? That's crazy. All right. So bullish key reversal bar so far in the month. You got to love that. Rising RSI. Weekly chart. Looking good here. Like it. We're down in the week, but we're holding support. I like it. Oh, I like PBR, man. Looks very, very good, Larry. Let's see if I'm missing anything here. I'm not. I'm not. Higher lows. This is going to be a macro breakout. Let me demonstrate what I mean for you about macro breakout. This is a monthly chart, PBR. Why am I getting that line? So here's your first phase. We broke out, pulled back, retested, rallied, consolidated, bull flag setup, breakout on the month. Now you're going to have your second and real serious primary resistance level, which we are currently above. That's a beautiful chart. That's a pretty chart. Congratulations, Larry. You're beating yourself up. Very, very nice. Very, very nice. All right, I got to speed this up. I got my daughter coming home from college. RIVN. My son's graduating college tomorrow. Proud of him. Biology degree. I can't even do simple arithmetic. I don't know where he got. I guess he got it from his mother. Higher low. This is let's go to a monthly chart. I never begin on a daily chart. All right, so there's no data here. I mean, it's extremely volatile, man. I'm not going to have much to offer you here in terms of technicals, except very, very short term. You know, as is typical, this looks like it's just IPO. It is typical at the end of a bull market. IPOs come public and they're junk. I mean, look at Robinhood, junk. We broke down below the lower band of support. So if we break down below 99 bucks a share, it's not looking good. It's going to go a lot lower. So I would not buy this stock. It's in trouble. And there's not enough data on a historical basis to say, okay, we're near the end of a bull market, or near the end of a bear market, or not. I just don't have enough data. But on a short-term time frame, the technicals are just implying that we're putting in lower highs, lower lows, zero reason to be long of this stock. 4-hour chart. We broke down and we rallied back in the afternoon trying to recapture support, failed. If we break down to new daily lows, if I were long, me personally, I would be out. If you're not going to get stuck out on a new daily low, I would, if God said to me, you got to get out where, 99 bucks a share, a close below that mark, you got to get out because that would mark a new lower low, RIVN, avoid. You're welcome, Franklin. SoFi. Avoid it. You know, it's just another one. They IPO these stocks and there's no there there. There's just nothing there. Weekly chart. higher lows, higher highs, new weekly lows. If we break 1350 per share and we close their weekly time frame, we're going a lot lower. Big distribution bars, daily chart. Outside reversal bar today. I would avoid it. I hate to beat up on people's stocks, especially if you're long, but I always like to say a stock's got to earn its right to be bought and to be part of your portfolio. This has no business in being anybody's portfolio. It's junk. AMC. AMC finally broke. I guess Wall Street bets is Wall Street gets now because this is done. Big monthly breakdown. What are we down on the month? 30% on the month. Bananas. We're holding the lower band of support here. But the monthly chart trumps the weekly chart. Weekly chart trumps the daily chart. So the monthly chart is telling you, look out. I mean, every time they rally it now, they rallied it after it broke down this week here, the week of November the 29th. They rallied it back, rejected it, resistance, dropped it back down. I would avoid this. This is definitely not an investment. I would avoid it. BIGC. This is going to be the last one of the night, folks. I'm way over. Weekly chart of BIGC is looking interesting. The monthly chart isn't, though. Monthly chart at current, we're trading down below the lower band of this descending wedge formation or downtrend channel. We managed to rally back off of these breakdowns. Maybe I should modify this downtrend channel a bit here. So we're at that lower band. Let's take look at the weekly chart. I would avoid it. I'd avoid it. These are the automated trend lines saying, hey, you got support below. But where I long, I want to have my alert set. We break through and stop out. All right, folks. With that, I'm going to say, everybody, thank you so much for being here. Another Thursday. Have a profitable trading day tomorrow, a great weekend, and a Merry Christmas for those who are checking out early. And don't forget, TrendSpider 35% off. I give it away free silver and gold level memberships. And thanks for being here, everyone. Very much appreciated. I love spending time with you and appreciate you being here with me. Be well. Have a great night.